Stephen Schwarzman, whose journey to becoming one of the wealthiest individuals in the United States is nothing short of remarkable. Formerly hailed as the undisputed king of the private equity industry by Forbes magazine, Schwarzman boasts a staggering net worth of $37.3 billion, ranking as the 79th richest person globally. At the helm of the Blackstone Group, the investment company he founded, Schwarzman oversees a colossal $684 billion worth of assets as of September 2021. His influence extends far beyond Wall Street, as he plays a pivotal role in managing capital for pension funds, sovereign wealth funds, central banks, and other institutional investors worldwide. But what sets Schwarzman apart is not just his financial prowess, it's the breadth of his global business interests. From private equity to debt financing, hedge fund management, and real estate acquisitions, Schwarzman has left an indelible mark on the financial landscape. In this video, we'll unravel the secrets behind Schwarzman's success, exploring how he built the Blackstone Group into the world's most powerful alternative asset manager. Stay tuned as we delve into his journey, philanthropic endeavors, and the impact he's had on the financial world. This is the extraordinary tale of Stephen Schwarzman, the man, the mogul, the legend. Let's get started. Meet Stephen Schwarzman, a determined individual born into an ordinary middle-class family that embodies the essence of the American dream. Through relentless hard work and sheer willpower, the Schwarzmans transformed a humble home goods business into a thriving success story in their community. Stephen's entrepreneurial spirit kicked in at just 14 when he ventured into the business world with his lawn mowing service. Alongside his brothers, Mo and he, they not only mowed lawns, but also hustled by selling candy door to door. Despite these ventures, Stephen remained deeply involved in the family shop, tackling odd jobs for a meager 10 cents an hour. From selling handkerchiefs to packing curtains, he immersed himself in the business his father, Joseph, inherited. However, young Stephen found the daily grind monotonous and beneath his aspirations. Despite his disdain for the family store, he couldn't ignore its success. Recognizing an opportunity, he proposed expanding the business beyond Pennsylvania to cities like Chicago and New York. Unfortunately, his father rejected the idea, unable to grasp the vision. Undeterred, Stephen is determined to build an empire and is prepared to face battles to achieve his ambitious dreams. In the late 1960s, fresh out of Yale in 1969, Stephen Schwarzman embarked on a journey into the financial world with a role at Donaldson, Lufkin & Jenrette, DLJ, an institutional asset management firm that had recently made its mark on the New York Stock Exchange. Notably, DLJ was co-founded by Bill Donaldson, the visionary behind the Yale School of Management. At DLJ, Schwarzman's passion for corporate finance ignited. This was the place where he delved into the intricacies of the stock market, money management, and the art of analyzing financial statements. A pivotal moment occurred when he was assigned to interview an executive from a publicly traded company to assess its stock as a potential investment. However, the executive's reluctance to disclose certain details due to insider trading laws left Schwarzman frustrated. Realizing the importance of having comprehensive information for sound investment decisions, Schwarzman made a bold move. Despite his professional experience, he opted to pursue further studies at Harvard Business School. His goal? To bridge the gap between incomplete information and effective investment analysis. This decision set the stage for Schwarzman's continued journey into the world of finance, shaping his approach to investments and laying the foundation for the remarkable career that would follow. In the fast-paced world of finance, Stephen Schwarzman's journey is nothing short of extraordinary. Starting his career at Donaldson, Lufkin & Jenrette, he quickly rose through the ranks, eventually becoming the head of global mergers and acquisitions at Lehman Brothers by the age of 31. But the real game-changer came in 1985 when Schwarzman, alongside his former boss Peter Peterson, founded the Blackstone Group with just $400,000 of their own money. What began as a focus on mergers and acquisitions evolved into a financial powerhouse, branching into business acquisition, real estate, direct lending, and alternative assets. Today, Blackstone manages a whopping $500 billion in assets. Schwarzman's knack for private equity investing set Blackstone apart. Uninterested in stock market speculation, he recognized the value of privately held businesses for their transparency. This allowed Blackstone to closely scrutinize investment opportunities, a strategy that proved successful over time. Initially facing skepticism from investors due to their limited experience in private equity, Schwarzman and Peterson built credibility by operating as a mergers and acquisitions advisory boutique. Notably, in 1988, Blackstone advised CBS Corporation on the sale of its subsidiary CBS Records to Sony Corporation, marking a significant milestone for the company. In 1987, Stephen Schwarzman achieved a significant milestone for Blackstone by successfully raising a whopping $800 million for their inaugural private equity fund, Blackstone Capital Partners I.L.P. This financial feat was made possible through major investments from notable entities such as Prudential Financial Inc. and General Motors Company. Diving into the mechanics of private equity funds, they typically operate as limited partnerships. Investors, known as limited partners, contribute the majority of the capital but play a non-active role in management. The general partner, in this case, Blackstone, allocates the pooled funds into various investment opportunities. The general partner earns a management fee, a percentage of total assets, and a share of profits realized. For instance, using a standard industry compensation structure, if Blackstone manages a partnership with $500 million in assets and achieves a $150 million return, it would receive $40 million in fees, 2% of $500 million, and 20% of $150 million. Blackstone also earns additional returns on the capital it invests directly. Since its inception, Blackstone has raised over $100 billion for its private equity funds alone. Their latest triumph, Blackstone Capital Partners VIII, amassed an impressive $26 billion in 2019. According to Schwarzman's presentation at Yale, the private equity funds under his leadership delivered an impressive annual average return of 23% from 1988 to 2008. Since the launch of Blackstone's first private equity fund in 1988, Stephen Schwarzman has orchestrated a remarkable expansion of the firm's business segments. Today, Blackstone not only provides mergers and acquisitions advice, but has also become a powerhouse in private equity fund management. Beyond that, the company manages diverse funds, including those focused on hedge funds and real estate investment partnerships. In a bold move in 2012, Schwarzman's real estate team embarked on a massive initiative, purchasing single-family houses across the U.S. with the ambitious goal of converting them into rental properties. Their aim? To acquire a staggering 50,000 houses over the next 3 to 4 years, showcasing Blackstone's innovative approach to real estate investment. Taking a significant step, Schwarzman decided to make the Blackstone Group public in 2007. Originally a limited partnership, LP, it transformed into a C Corporation, C Corp, in 2019. The initial public offering proved to be a financial triumph, raising over $4 billion and solidifying Blackstone's position in the market. In 2014, it was reported that Schwarzman received a substantial $690 million in Blackstone dividends alone, underscoring the financial success and impact of his strategic decisions. Schwarzman and Pete, the architects of Blackstone's success, strategically built their financial empire. With a billion-dollar private equity fund in 1988, they entered the big leagues, focusing not only on fixing companies, but also on shaping entire industries. Using detailed analysis, they identified opportunities for consolidation, like partnering with the second-largest funeral and cemetery company, Leuven Group, in 1996. Blackstone made strategic acquisitions, including Rose Hills and Prime Succession, making waves in the industry. They replicated this success in 1997 with Allied Waste and Browning Ferris, reshaping sectors to ensure their dominance. Investors in their private equity fund reaped over 20% average annualized returns. Blackstone's influence extends beyond private equity. Their significant impact on real estate is undeniable. Through Blackstone Real Estate Income Trusts, they became the world's largest commercial real estate owners. Notable acquisitions like Hilton Hotels and Bellagio Resort showcased their prowess. Their ambitious move into residential real estate, purchasing nearly 300,000 American homes, paid off as property values surged. Blackstone's real estate portfolio now stands at a staggering $69 billion, solidifying its position as one of the largest REITs ever. In 2007, Blackstone went public, raising over $4 billion and marking a turning point in its journey. Schwarzman's strategic moves catapulted Blackstone to a $100 billion titan, eclipsing other private equity firms. Today, Blackstone is a global powerhouse, with Schwarzman's influence extending to political leaders worldwide. The story of Schwarzman and Blackstone is a testament to the tenacity required for success. From humble beginnings in a family shop to building a financial empire through determination, strategic moves, and a relentless pursuit of more. The journey of Stephen Schwarzman and the rise of Blackstone from a humble family shop to a $100 billion titan is a testament to the power of determination and strategic vision. Schwarzman's tenacity, from sweeping his dad's store to shaping entire industries, has left an indelible mark on the financial landscape. With a meteoric rise in private equity and real estate, Blackstone stands as a global powerhouse. Aspiring to more, Schwarzman's story teaches us that success requires blood, sweat, and tears. From their first private equity fund in 1988 to becoming the largest commercial real estate owners globally, Schwarzman and Blackstone have exemplified the pursuit of excellence. Whether influencing political leaders or making groundbreaking real estate acquisitions, their legacy is one of resilience and relentless ambition. If you found this video informative, don't forget to like, share, and subscribe. Keep the conversation going in the comments section below. Stay informed, stay engaged, and until next time, take care.